last Friday, the European markets were rebounding on the hopes that the coronavirus was being contained, that China was putting more cities on lockdown, and that the World Health Organization had stopped short of announcing a global emergency. Now those fears, predicated on the impact the illness will have on the Chinese and global economy, have come back with a vengeance. A weekend full of increasingly alarming headlines about jumping death tolls and known cases rising into the thousands has sent the global markets reeling. In fact, one expert has claimed there could be as many as 100,000 affected by the virus, a figure that dwarfs the official number. In America, the fifth case has been confirmed, though those figures are constantly shifting. All that has dragged the Dow Jones back to 28,700, for now killing off hopes it will reach the mythic 30,000 level anytime soon. Even without the focus on the outbreak, it'd be a pretty busy time of it for the US. Globally, as well, as a significant week, seeing both Mark Carney's final outing as Bank of England governor and, on Friday, the UK's withdrawal from the EU. The big question now, however, is whether any non-coronavirus news can actually break through and make investors listen. Data-wise, the CB consumer confidence number on Tuesday is set to rise from 126.5 to 128.2, with Thursday's first glimpse fourth quarter GDP reading expected at 2.2% at the annualized rate against the 2.1% growth managed in the third quarter. Friday's Fed favourite core PCE price index figure, meanwhile, is said to remain unchanged at 0.1%. Also on Friday is a pair of PMI readings from China. The manufacturing reading is set to dip from 50.2 to 50.1, with its services counterpart down from 53.5 to 53.2. Any movement around those estimates could be of interest to traders, given the market's sensitivities to Chinese data. There's also the latest Federal Reserve statement on Wednesday evening. It could be a quiet one after 2019's rate-cutting action. However, any hints as to the bank's future plans are always welcome and could lead to some movement. Perhaps the biggest aspect of the US week is the corporate calendar. It's chock full of big hitters, including Apple, eBay, and Starbucks on Tuesday, Facebook, Boeing, Visa, McDonald's, Tesla, and General Electric on Wednesday, and Microsoft, Amazon, and Verizon on Thursday. Having roughly doubled its market value in the last year, now trading just shy of $320 per share, Apple will be looking to start its 2020 with a bang with its first quarter results. Any indication of how successful Apple TV Plus has been will grab headlines, but the real market-moving numbers will be the classics. Earnings are expected at $4.59 per share against $4.18 for the same period the year previous, while sales are estimated at $88.42 billion, a near 5% increase year on year. As mentioned, however, it's going to be incredibly tough for anything to disrupt the coronavirus focus in the coming days, especially if those death toll numbers and the number of cases keep rising at the alarming rate, as was seen over the weekend. It will be interesting to see what the markets will take as good news regarding the outbreak. That might come in the form of a plateauing sort of outbreak numbers, but without that kind of pause, the markets could remain on red alert for the rest of the week.